Middle East. It says that nearly 95% of the sites are open, but supply chain disruptions are there. So do you see margin impact coming on L&T in this quarter and next quarter?
Hi, morning to you and your viewers. Definitely. I do not see much impact this quarter, but definitely from the next quarter onward, you are going to see margin impacts. Now, L&T is in a typical situation basically where in the short term it's going to get impacted, but in the longer term, I'm saying medium to longer term, basically it's going to get benefited out of this because one third of its revenues are coming from them from the Middle East, and it's very heavy on the oil and gas side. So obviously, what has happened in the Middle East, they will get a lot more business basically to do all this. But in the short to medium term, yes, it's not a good sign for L&T.
Nischal, the company is also looking at transitioning itself from a fuel point of view to now green hydrogen and green ammonia. Do you think that that's the way we earlier, no, last week I think we saw Reliance talking about the same thing with, our deal with Samsung. Now L&T is talking about the same thing. So there's a transitioning of fuel also which is happening in as we speak. Do you think that, that's another way how we will be able to, manage the fuel transition as well?
So I think green energy is a emerging area of business basically. I think most of the large companies are gravitating towards that. But I don't think anything is going to happen in a short term because these are all long-term projects. Even the Reliance one we are talking about from 2030 onwards is going to get implemented. So I'm saying these are very long-term projects. I don't think it will have any impact on L&T's numbers in the next 1 or 2 years.
The other stock that I want to talk about is definitely InterGlobe Aviation as well. The fact that the government has now removed the domestic airfare caps with effect from March 23rd. Now, these caps, remember, were temporary price ceilings which were earlier implemented on ticket fares. Having said that, at a time like this, there is lots which is in question for aviation as a sector. Of course, the ATF price hikes. Then, of course, the international sort of traffic as well is down a good 20% on a month-to-date basis for InterGlobe Aviation alone. So all that, of course, is going to get impacted, and it's it's one big confluence of factors which are going to impact where InterGlobe Aviation heads from here. But Nischal, you think after the recent decline in InterGlobe, it could be well baked into the price?
I think quite a bit is baked into the price. Basically, the stock has come up from I think 5,000 to maybe 4,000 now. Quite a bit of that is baked in. But basically, I don't know how long this conflict is going to last, basically, and how soon we are going to have the flights taking off. But you are right, basically. I think quite a bit is baked in. I don't think so. There's a good price to sell off. Maybe another 5-10% down, you should be a buyer on this stock.
Kunal, what is your sense? 5-10% lower, is that where you see a bottom for InterGlobe Aviation, or do you think the worst is now behind largely?
Yeah, I think a major part of the correction is now behind for the stock price. There could be more of an inertia-based correction, confirmation-based corrections. So I think if traders are waiting for the results to come out and then to judge the impact for the stock price or some sort of news flow to come out, or maybe the final spike in crude oil prices, that last residual correction I think could be over, because you're looking at the point where the stock is not intense into a corrective wave. In the last, I think, month of December and Jan, there was a point where the stock used to fall very, very sharply, aggressively. For the first couple of days when the crude oil prices spiked, that was the point where InterGlobe Aviation or Indigo as a stock price, I think, corrected very sharply. But then now I think it's more dependent on the market. So the market goes into a correction, the stock also corrects by another couple of percentage points and then drags lower for itself. But it's not been an intense correction for the stock in the recent past, and that's why you can probably sense that the volumes dropping down for Indigo as a stock price indicates that the selling pressure is not very steep, and that indicates that maybe from here to the next 5%, 10%, the stock could form a decent bottom for itself.
Okay, let's address some of the other newsmakers as well this Monday morning. While, of course, we are counting down to the market pre-open and the GIFT Nifty or the implied open is already indicating quite a bit of a gap down start. But Meryl is here to highlight some of the other newsmakers this morning.
Yes, coming to you with another list of stocks that are going to be in focus today. Starting with the defense space, we've got DCX System. The company has received a large order worth around 563 crores. And this is for the supply of maritime patrol radar systems, which is going to strengthen the company's order book as well as its upcoming revenues visibility. Moving on to capital allocation, the board of Forgings will be considering a fundraising in its upcoming board meeting, that is on the 25th of March. But also in news today is Kirloskar Ferrous Industries. The company has resumed operation at one of its 2 high-pressure molding lines at its Solapur plant, which were earlier disrupted by the LPG supply concerns. Now, this line is to be using alternate fuel and has resumed operations. In the pharma space, we've got Alchem Labs. The company has received EU's Good Manufacturing Practices certification for its Daman facility, which is a positive towards the company's export business. In the auto space, Ashok Leyland has approved an investment of around 30 million pounds, or that is about 375 crores rupees, in its UK subsidiary, which is Optare, indicating continued focus in the company's international EV business. In the QSR segment, Devyani International has approved a 347 crore investment in a Thailand-based operator of around 247 KFC restaurants, supporting the company's balance sheet as well as its long-term expansion. And finally, Europe Pratik sales will be in focus today after the company's 62% of its equity share capital comes out of a lock-in. So yes, that was a quick list of stocks that are going to be in focus today.
Okay, thank you so much for that, Meryl. Nischal, the other piece that's playing out is the entire GLP-1. How do you play that theme?
Sorry, I couldn't get your question.
GLP-1, Nischal, semaglutide.
Yeah.
How do you play that theme?
So I think the larger players basically who have got an established distribution network, I think those are the guys to play with. I think Glenmark, Dr. Reddy's, these are some of the guys basically which have got a local distribution also. Now there'll be something like a Natco Pharma and all basically which are also going to get it, but they have to share the margins with the local distributor. So I would want to play with the bigger guys, the Glenmark, Dr. Reddy, Sun, Alchem. These are the large distribution companies locally. So I would want to play with them.
Okay, let me in fact go across to Meryl, because there was this entire rush of announcements that came in on Saturday where you had a bunch of companies launch semaglutide. Now this was anticipated, and it's also an entry of Indian pharma into a new phase, which is diabetes and obesity care, with several companies launching their versions of semaglutide. Firms included Dr. Reddy's and Natco. They're some of the early movers, with more domestic players also expected to join in a staggered fashion. Meryl here with a pricing comparison of all the launches so far.
Well, yes, semaglutide's patent is officially expired in India. Let's take a look at some of the key weight loss drugs that have entered the market so far. Starting with the ones priced the lowest, we've got Natco Pharma, Eris Life Sciences, and Glenmark Pharma. Now, Natco and Eris have partnered up together, launching Natco's manufactured drug under separate brand names, both priced starting around rupees 1,290 per month. Glenmark as well is going to be launching its drug starting at rupees 1,300 per month, and these are all in a vial format, which is why they're able to sell for so cheap. Clearly, they're positioning themselves as cost-effective options, but these brands are also looking to announce a pen device version, looking to capture the higher end of the market as well, and this is going to be coming later around April. But coming to the pen device drugs, we see a range of prices here as well. Positioned more affordably in this segment are Alchem Labs, starting at rupees 1,800 per month, and also Zydus Life Sciences. The company is going to be leveraging its novel, reusable, multi-dosage pen device, starting at around 2,200 per month. Now, on the higher end of the spectrum of weight loss drugs lies Sun Pharma and Dr. Reddy's, both employing more of a premium pricing strategy. Dr. Reddy's launching at around 4,200. Sun Pharma's prices is ranging around 3,600 to 8,000 rupees. And lastly on our list is Torrent Pharma. Their price starting at rupees 4,000. But what's interesting is that they're also going to be launching an oral formulation. So yes, this is quite an interesting space to watch with new brands entering day by day.
Yes, and so many cheaper as well already hitting the market. Okay, on that note, we're going to take a very quick break. Come right back. We'll continue our market discussion with Kunal Bothra as well as Nischal Maheshwari.
So, of course, this is likely to have an impact, especially on the smaller lenders within that MFI basket. Cost of funds will shrink. They will have to bear a 0.5% fee to the government to ensure that they can avail the scheme. And lending rates for them will come off by around 1% or thereabouts. So for the smaller lenders, it's beneficial. I think that's the view really that's coming through. Nischal, do you have a view and how would you likely play this cycle? Because MFI likely seems to be bottoming in terms of the pain.
So I agree with you. Basically, I think this is beneficial basically as far as the smaller players are concerned. Obviously, when the government guarantee goes up from 7,500 crores to 20,000 crores. Now, the issue about the MFI space is basically too many players all pursuing the same set of clients, nobody following the rules of not more than 2 or 3 loans. I think that's where the problem is. So the broader problem is the credit. Basically, the credit worthiness of the whole sector, that is the problem basically, because every 5 years you have a heart attack there out there and 10-12% of everybody's AUM gets wiped out. That's a major issue basically as MFI is concerned. I don't think so we are really bothered about the margins because I think it's a very, very lucrative business. But the issue is that given that it's a lucrative business, you attract a lot more competition out there. And then everybody wants to show the growth, and that's where the problem starts. So that is a bigger thing, basically. So somebody who's more entrenched, is much more disciplined. I think those are the guys, basically, which is going to benefit out of that. And that's why I believe the larger players are going to be the bigger beneficiaries of this. The smaller ones, yes, because of the government guarantee will have some benefit, but the bigger guys are the winners in this sector.
Okay, that's what's happening in the MFI space. In fact, later on in the show, we're going to address that in greater detail as well and have the management of Mass Financial as well join in. But let's talk about HDFC Bank. And adding more woes now to HDFC Bank, the lender has now asked 3 senior executives to step down over the weekend as part of its ongoing internal probe into the sale of Credit Suisse 81 bonds to clients. Now, the action comes after earlier measures where some officials were placed on leave as the bank intensified its investigation. Ankur Mishra, my colleague, is here on what's the latest going on with HDFC Bank.
Yes, HDFC Bank has confirmed that they have identified certain gaps in the DIFC branch and they have taken action on the same. Remember, ET Now did a story that HDFC Bank has fired 3 of its top executives, and this was regarding a pending investigation by HDFC Bank, and therefore the action has been taken by the bank. The bank has also said that the branch in UAE has completed detailed and objective review of the matter, and appropriate remedial steps have been taken in line with the policies. In fact, HDFC Bank also confirmed the ET Now story, saying that personal changes have been undertaken along with appropriate action as per the bank's conduct regulation. Now, this matter has been pending for a long time, whereby the Dubai financial regulator had put in an embargo for onboarding of new customers at DIFC branch for HDFC Bank, and upon completion of investigation, the action has been taken by the bank. Remember, these employees were already put on gardening leave before the termination has happened. Now, this has come at a time when HDFC Bank is grappling with the other issues as well, including the ouster of the former chairman, and that too in a strongly worded letter where he mentioned about the personal values and ethics.
Okay, that's that on HDFC Bank. Nischal, just wanted to understand, what about HDFC Bank? While the price may be looking attractive, the news flow surely is not quite done. Would you say just sit it out on the sidelines and observe the news flow over the next few days first?
So first, I would like to make a disclosure. I own HDFC Bank, and therefore may be biased in my opinion. But I think let's wait it out. This is we have not seen the end of this controversy. Basically, there is no point on rushing into the stock at the moment. Though I do agree the valuations are very attractive at these prices. But let's wait out this crisis. I am very sure basically it's a premier institution which has been created over a period of several decades. I will never, I wouldn't want to believe that there is going to be any corporate governance issues, but let's wait it out is what my recommendation is.
How do you look at the valuation point from a valuation point of view? You said you have to wait it out, but people who are holding the stock at this valuation, do you see the governance premium coming down for HDFC Bank, and hence it will start trading at a lower P multiple compared to other private banks?
So it's already actually the multiple has already come off quite a bit. Basically, if you remember, maybe a decade back, basically HDFC used to quote at 3 times, 4 times book. At the moment, I think it's at around 1.2, 1.4, 1.5 time price to book 28 numbers. So I think it's very much where SBI and all others are. So I do not see very much premium. Basically, maybe it's at a discount to ICICI at the moment already. So maybe some more correction, but let's wait out this crisis basically. And I wouldn't recommend to sell HDFC Bank at these prices.
Okay, wait it out, be on the sidelines, wait for the news flow to come in and for the stock to digest all of it. But Nischal, good to have you on the show as always. Thanks for your time. Just counting down to the pre-open rates then. Let me also welcome on board Chandan Taparia.